Hey traders, this is Blake Morrow with Traders Summit, and with me for the very first time, I have Rohit Srivastava, and I know I probably got that wrong, and I'm so sorry, and I apologize in advance, but he is the owner, CEO, and founder of India Charts. So good to have you here, Rohit.
A great pleasure to be here for the Traders Summit. Thanks for having me, Blake.
Yeah, it's great. I've heard you speak before, and I love like your knowledge in the markets. But for a lot of people, this was probably their very first time hearing you or seeing you for the very first time. So tell us a little bit about yourself before we start focusing in on the charts. And by the way, all of you at home, as you're watching Rohit at home, he is going to be showing us some charts in a few minutes. And make sure you give him a thumbs up if you're watching us on YouTube. So Rohit, tell us a little bit about yourself and your background.
So I started tracking the markets when I was in college way back in 1990. I just got interested in looking at stock prices and to try and understand how they would move. I thought the best way was to really look at a chart. But I didn't start out as a market technician per se, because my main idea was that I wanted to make money in the markets, which meant I studied everything from technical analysis, fundamental analysis, the economic cycles and impact on the markets. And as I continued to do that, I think my initial success was not that great, though I thought I had a fair understanding of charts and technicals into the year 98, 99, when I stumbled upon Elliott wave analysis as well. That made a huge difference in the way I really approached the markets, because now I was studying a behavioral, science of the market, which is the entire Elliott wave structure really relates with how markets behave and how the crowd is really behaving. Yeah. And that allowed me to then over time map the studies that I had done earlier, even how fundamentals evolve around the waves, how sentiment evolves around the waves, and how the economic cycles evolve around the waves. And then I put all of that together over time into different models that I'm able to use now. And I think when I just combined Elliott with just basic technicals, my performance went many-fold up, and we could actually see that in the results where I was working at that point of time.
So let me ask you this: what markets do you really focus on right now? I mean, are you trading U.S. equities? Are you looking at commodities? What maybe even currencies? What are you focused on?
So while my main market, of course, is India, over time to understand how India as part of the emerging market space functions, I ended up studying everything from the dollar to commodities to the forex markets. And over the last couple of years, one of the biggest areas where we've been focused in terms of investing and trading has been the metal sector, which is the Indian metal stocks, which then is backed by my analysis of commodity prices. And then that, of course, is backed by what the dollar is doing. The other place where I do take an exposure over time, where I believe I'll keep increasing exposure over time, is actually the gold and silver mining company. So that's another portfolio. So that's the only one which I'm holding outside of India. Rest of the metals and mining stocks are in India.
Well, that's super interesting. Well, I'd love to see what charts you're really focused on. But you say you focus on charts, well, your India charts, if you will. But now you're looking at the drivers of what's actually pushing and pulling these asset classes around, correct? And what really pushed you that way over the years?
So I think once we started to see, I think post the Y2K bubble, and then you had the housing bubble in 2008-9. Between those two, the Indian market went through a bull run. And when it did, I think initially we didn't really bother too much, because through the 1990s, India had gone through a strong economic contraction. And then when the expansion happened, we didn't think about why that happened. But simultaneously, what we were seeing was that the dollar was falling throughout those 7-8 years, and commodity prices were rising. And I think after 2009, I really wanted to understand why all of that happened. And that's when I went a little deeper into those trends, and then understand the macro behind what was really driving it, so that my confidence in the trades that I was really taking in emerging markets, and specifically India, like I say, could go up a lot more.
Awesome. Well, can you give us some examples? Maybe show us some of the charts of some of the markets you're focused on, and kind of what your outlook is in this very, very turbulent and high volatility environment.
Yeah. So I'll start off by talking about the dollar. Like I said, that's the centerpiece. And when I really combined economic cycle theory along with Elliott wave analysis on a long time horizon, I found that this was one of the important aspects, because we're always talking about inflation and deflation over the last 2 decades, specifically after debt levels went up so much in the developed world. That has been one of the most common themes. And the best way to really understand whether you're in an inflationary or a deflationary environment is to actually study what the dollar is doing. So this chart of the taken out from Bloomberg all the way back to 1970 shows that we have periods where for around 7 years to 9 years you have a bull run in the dollar index, and then for around 7 years you have a bear market in the dollar index. And this cycle is sort of repeated over and over again. It sort of explains why you had so many problems in the 1990s when the dollar index was actually going through its bull run, whether it's the Southeast Asian crisis, the Russian crisis, and so on. All of those happen when the dollar is in a bullish mode. During the bearish mode, we've seen emerging markets perform. We've seen the commodity markets do really well, which was what we saw from 2001 to 2010-11. Okay. Now, subsequent to that, again, from 2008 to 2016, we've been through a dollar bull market. We can debate whether 2016-17 was the final top, or the double top in 2020 is the final top for the dollar. In terms of time, of course, 9 years ended in 2017. So from Jan 2017 onwards, I took a view that the dollar is going to be in a bear market for the next 7 years based on this historical cycle. So that gives us time till 2024.
Well,
if I do, yeah,
I was going to ask you, has the current environment, because obviously we have Russia invading Ukraine, and who knows how much that may escalate in the future. Could that possibly change your view here? Or, I guess we could also say that the dollar response has been fairly muted based on what has happened thus far. Could that change your viewpoint?
So that's an important question, and so far it has not changed my viewpoint. Okay. There are a couple of things which have happened. One is sentiment in terms of how bullish people are on the dollar has reached the same extreme. In fact, maybe even more extreme than it had in 2020 when we were at the peak. So when we made that double top, I think the daily sentiment index, which is published by Trade Futures, was at almost 94%. And right now, we've not only seen it go back there, but in terms of the individual pairs, say, for example, the euro, which is part of the dollar index, it dropped to 5%, which is lower than what it was in 2020. In the last 1 week, I've seen the same happen with the British pound. It's happened with the Japanese yen. It's happened with the Swiss franc, all of them going into single-digit readings against the dollar, which means most people are bearish on these currencies relative to the dollar. Now, in Elliott waves, there's a basic theory that when you make wave 1 and wave 2, okay, at point wave 2, which is typically a higher bottom, sometimes the sentiment can be as bad or even worse than it was at the actual bottom, and that's the giveaway. That's the giveaway that it is a correction inside a larger trend and not a trend reversal. And that's sort of what I think we are now seeing in the dollar, which means the dollar index is not back at the highs that we were in 2020. Neither is the euro back at the lows where it was before. But the sentiment has already gotten worse than it had at that point of time. And so that sort of signals that this is a counter trend move in the dollar, which is close to its end, I would say, very much close to its end, or probably already complete. And when we look at that, and then we look at what should have been the usual effects of a rising dollar. So if we saw the dollar rising, say, in 2017, 16, or we saw it rising in, say, 2020, 1920, you would actually have seen commodity prices fall. You would have seen emerging markets taking a hit. Yeah. But none of that happened in the last 12 months. Okay. And so I'm not only talking about the Russian crisis, but this entire bounce in the dollar that we've seen in 2021 has really not had the same negative impact that it had in the past on either emerging markets, commodity prices, or the Indian market per se, where we are, all of which have actually done well. And so that signal, that also sort of gives me a sense that the dollar's up move is counter trend, which is why these markets are no more responding to it in the way they did before. And these trends will probably resume in a stronger way once the dollar actually rolls over.
That's I've noticed that a lot, obviously, and most of us have. You've seen this really strong move up in commodities, yet the dollar hasn't been as responsive as it normally would. So if the dollar is peaking, as you suggest, or maybe already has peaked, what are going to be some of the effects of the assets that you're watching right now? What should we as traders be looking at as a result of this?
So for people who are purely trading the forex markets, of course, they would, I think the best trade would be to look at being bullish the euro. Okay, but if you're looking for secondary effects of that, the next place I would then go to is look at commodity prices themselves. So if I simply go to look at commodity prices, and when I say commodity prices, I mean every aspect. So not just the metals, but also agro commodities, I think would do well. Whereas specifically track sugar, coffee, two commodities that we actually like. And then we look for companies that would benefit from those rising prices in India itself. Now, what I've opened on this chart is, of course, the metals, which are the first ones that come to mind in terms of where to benefit from. So we end up looking at things like copper, and copper has actually broken out, if I look at it long term, from a multi-month triangular structure. Okay, yeah. So in fact, multi-year triangular structure. Now, in Elliott wave sense, we usually call this triangular structure of a fourth wave, because triangles usually, with maybe a 90% probability, I would say, occur in fourth wave. So one of the easiest things that we do is when we spot a triangle, we say this is a fourth wave, and then we are breaking out into a fifth. And so when we are doing that, all we have done in copper so far is the first and second waves inside of that. And there hasn't been much of a retracement. So usually when you do a very small retracement, my sense is that's a sign of strength, that the underlying commodity is very strong, which is why it's not pulling back. Yeah. And is likely to continue in that direction and that trajectory. And one past evidence of this happening is actually back here in 2004-5, where it paused, just consolidated, and then continued to break out on the upside. So this is somewhat, I think, similar pattern that we are seeing right now.
Yeah, that's and you would even see it in some of the currencies that tend to follow copper, which would be like the Australian or New Zealand currencies. They're really just not pulling back a whole lot. What other commodities look really good to you?
So apart from that, I think so I would focus on the whole metal pack. Of course, copper is one of them. Aluminium is the next one. So aluminium and copper pack. I mean, aluminium has actually done much better recently, though copper did much better last year, and so that's actually helped us focus more on these stocks. So in India, we actually saw the trend where steel stocks did better for the first year post pandemic into 2020. Than the other commodities. And then I think once the problems from China came in, where they put some restrictions, I think in June of 21, and then steel prices fell a lot. And after that, aluminium prices continued to rise, and then copper and aluminium stocks in India did extremely well compared to the steel stocks. So there has been this rotation between steel and copper and aluminium stocks. So we keep looking at which one to allocate more to. And for the last 4-5 months, it has been more about aluminium and copper stocks rather than steel itself. But my sense is that steel stocks also start doing well eventually, because now what you're actually seeing is a rebound in steel prices.
Okay. And were you going to show us anything else regarding steel? Or there we go.
So when we look at if I simply look at the steel futures, these are the NCDX steel futures which trade in India. They've actually shot off to a new high.
Wow!
So this is a pretty strong trend we are seeing. Of course in iron ore we don't see that. If I go to iron ore, we only see a retracement so far of the previous decline that we had, and so they have still not gone back to the highs. But we are seeing a good rebound coming back to this space. So I do think steel starts doing better again, but for the time being, still focusing on aluminium and copper producers, because that's where most of the momentum is coming.
All right. Well, those are some pretty bullish looking charts that you just showed. Let me ask you one last question before we wrap up. I know a lot of our traders and a lot of people that are watching the Trader Summit interviews, they really focus on precious metals. And you said that you like to focus on some of the precious metals as well. Do you have any view on gold and or silver at this point in time?
Yes, my sense is that the 1 year long consolidation that we actually saw in gold and silver. So I'll open that chart. I actually ended up opening the miners. So
that's okay. We do that too.
So when I look at the long-term picture of gold, what I think is you had if I actually think in terms of wave structure. So let me get my marker here. Yeah. So my sense is this was a larger first wave and a second wave that developed, and you started a third wave. And within the third wave, all we've done so far is just the first of this bull market. And the entire of last year, which is 2021, was a long consolidation in gold, which I'm marking as a second wave. Okay, so if I just now zoom in on that. Okay, so we'll move to, this was a monthly chart. I'll go to a weekly chart. So what we've done here is at the end of the consolidation, we have a triangular structure that we've broken out of. And usually in complex characters, triangles usually form the last leg of the pattern. So I'd put a pretty high probability now that wave 2 ended at this point. And from here on, what we've done is we've done our first rally and we've done our first pullback. This is the start of a larger third wave, upward trend for gold and silver, which should probably go on, I think, for most of the next year or coming 2 years. And we should see much higher prices, which means moving up towards, I think, $3,000 or at least is the next objective. And in the very short term, we've done a 61% retracement in wave 2. So I would sense that wave 2 is almost over. We are looking for the signs of momentum that 3 starts. And the third wave here should probably head towards around 2,200. That's what I'm looking for in the next month or two.
Well, I think you just made every gold bug's day, and that's exactly what they want to hear. You know, I find it fascinating regarding gold that it took the Russia-Ukraine situation and the invasion, if you will. It took that to really push gold out of that triangle that you were just pointing out. Gold had all the reasons to rally, and now it's finally doing it. And hopefully, based on your charts, it looks like it might continue here.
Yes, definitely. I think it's going to continue for a period of time.
Well, Rohit, I have to say, I really enjoyed spending our time together. Can you tell us a little bit about what you do over at India Charts and how that operates? Because if I'm a trader, I'm just hearing your name for the first time. I want to find out more about you. So what do we do? And what do you do?
So what I do every day is we don't really manage other people's money because we are mostly I'm handling my own funds. But what I do is I share every piece of analysis and every thought that goes through my mind on these charts through my blog and through my newsletters that I publish at indiacharts.com. So we publish daily notes on what's happening to the dollar, to the commodities, to various forex pairs. And then I come up with a weekly update on these markets, and then something known as the long short report, which I write once a month. The long short report is more like a strategy which tries to cover all these asset classes and link them together. So that sort of gives people a sense of what I'm thinking about and why I'm thinking about it in the way I am. And then the daily updates try to keep people up to date on each of the aspects as they are really changing and moving forward.
Well, Rohit, I tell you what, I really enjoyed our time together, and I'm excited to actually meet with you on a more consistent basis because I love your charts. I love the way you put everything together for us traders at home. So I want to say thank you very much for joining us today. If you guys and gals like what Rohit showed you today, make sure you give him a thumbs up. Subscribe to our channel down below so you don't miss any of our other content that we offer. Rohit, thanks for joining me today.
Thanks, Blake. It was really a pleasure in sharing these views and this analysis is what I really love to do. So thanks a lot.
It's great having you here. Thank you. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.